Hey, Renter Retires, it's Adam Schrader here with another episode, and I am joined today by Joe Riley. He is the CEO of Patriot Family Homes, and we're going to talk a little bit about his journey and a little bit about what he's doing in real estate now. So, Joe, welcome to the show.
Thanks so much for having me on.
Absolutely. So, tell us a little bit about yourself. How did you get started in real estate? Where was your first deal, and kind of how have you progressed through your journey?
Yeah, so I had no intention of doing this, but I was in the Army and moving kind of from base to base. My wife and I moved, I think, 8 times in 8 years, as many military families do. And so then I was stationed down at Fort Benning, got deployed to Afghanistan with the Rangers. My wife kind of travels for work, or did at the time, Monday through Thursday or Friday. So we just decided to throw the house up on Airbnb and home away, and quickly realized, no surprise, there's a big need for furnished short-term accommodations around military bases. And so when I got back from Afghanistan, started buying another house and another house. And, we were doing the typical BRRRR model of buy, renovate, rent, refinance, repeat. And then expanded from Fort Benning in Columbus, Georgia, out to other military bases. And then ultimately realized it's not just military bases that need this sort of product, but, it's needed in other markets as well. And so started branching out to other communities also. And so that's what we do. We now have a management company that provides management services for our homes. And we have launched several other kind of funds of other propcos to go out and buy real estate that we then acquire and renovate and manage. And then and we work with just third-party vacation owners as well.
So were you using VA loans or just your own savings, or how were you acquiring the properties back when you were doing your kind of BRRRR strategy?
So when I first started, we were buying off the very, very beginning, we were buying off cash. And then we took a line of credit margined off of our publicly traded stocks and used that as a substitute for cash or in addition to cash. And then once we had stabilize the property post renovation and renting, then we would move it initially to, you can't use VA loans for it, but we would just move to, you can have up to 10 conventional mortgages, kind of Freddie backed, 30-year fixed rate loans. And so we did the 10 or so of those that we could. And then once we capped out from that, then we started working with, regional and community banks.
So how did you learn during your time? You obviously, if you're living in 8 places in 8 years, you're not living where you have properties. Were you using management companies? Were you managing them yourselves? What were you doing there?
We always self-managed. Yeah.
So talk a little bit about how you went about self-managing. And obviously I'm guessing you're not fully self-managing now with your company, but how has management of it changed over the years?
Yeah, so we still, we have we created another management company, right, that has grown alongside the property companies, and so when I say we've now got 80 or so people who work in the management company, but we're still managing through that company then, and then obviously manage for a lot of other people as well. So we were a little bit different. I mean, we take over a lot of short-term rental properties from folks who, it can be a grind, right? I mean, anybody who's had rental real estate knows that it can be a grind, and the cash flow is great off of short-term rentals, but turning a house 50 times, 55 times a year, 60 times a year can be a headache, right? And so we take over from a lot of people who want to have, I would say that short-term rentals, if you're self-managing, is not passive income, right? No. Short-term rentals, if you're contracting that out to another company, is passive income. But, so we find a lot of people who want to partner with us because they do want to have passive income from a short-term rental, but then they realize managing the short-term rental is not passive. And so then they kind of contract that operational work out to us.
Yeah, absolutely. So when you're going around and finding your team members, kind of what are the key things that you look for in your real estate team that you've built up over the years?
Yeah. So I guess it depends on what role we're hiring. Obviously looking for different things on the accounting team versus the HR team versus the deal team versus the reno teams or the FF&E procurement and install teams. But if we try to synthesize it down, we like to say we're looking for people who are, as kind of cheeky or simple as this might say, we want people who are grateful to be coming to work for our company, and then we're in turn grateful to have them. And so gratitude is actually a really important characteristic that we look for, because it's a dirty fingernails business that requires a lot of energy and commitment to do it. So that's really important to us. And then I could talk, if there are specific kind of roles that you're interested in, happy to talk more about kind of specific than more technical skills that we look for in individual roles.
So why management? I mean, management is probably the most thankless and miserable part of real estate investing. What made y'all decide to go down that route?
Well, I mean, we still own a lot of stuff, and I mean, a huge
Right.
portion of our focus is on the real estate. But I like building teams from my days in the military, right? And so building teams to kind of manage the properties we felt was accretive in value to the property companies, because we felt we could do so better and more affordably than if we were contracting it out to some of the other players that we were looking at. It's a challenge, and we enjoy the challenge. And then two, the ability to kind of control our own destiny, because our management company doesn't just manage. It has an underwriting and acquisitions team that go out and evaluate new markets, and then find realtors, and acquire and negotiate properties, and then does the renovation. And then we have a procurement team that procures all the FF&E, and then goes out and installs that FF&E in the homes, and then does the maintenance and the guest services and the sales and the marketing. And so we felt it was, if you were just doing 5, 10, 15, 20, frankly, less than 100 properties, it's hard to kind of self-manage, right? Because it's just you never get to escape the grind, and you're not able to achieve the economies of scale and the specialization that you need. It's really about are you wanting to just have a couple properties, or even a dozen or so properties, and you want it to be passive income? If so, great. You focus on getting great, buying the properties, renovating them, whatever else, and then pass off the management to someone else. But if you're trying to build a huge enterprise, that's going to be thousands of properties, then you kind of want to have an affiliated management company to take care of that for you.
Yeah, absolutely. So you mentioned having the team members who go out and look for the markets and find them. What are some of the things that y'all look for in individual markets, and what are some of the areas that you think are currently kind of primed for the best success? I mean, specifically right now, we're obviously talking more on the short-term rental side, because I assume y'all are not fully evaluating these markets for the long-term rental side based on your focus.
That's correct. We are looking at short-term rentals. So, at the most basic level, we scrape a bunch of data, and we're looking at where do we have the highest percentage of short-term rental revenue as a percentage of, average home values there, right? So that's what we're looking for. And so we would say we're looking for affordable real estate markets that have a lot of churn, because the churn is what creates the demand for our products or service, right? And then obviously the low or the affordable, real estate markets is what gives us a low cost basis in the asset. So then what sort of markets meet that? Military bases obviously are one. You have a lot of turnover there. It creates the churn. Typically real estate prices aren't crazy around military bases for a variety of reasons. Two is around, kind of blue collar destination locations. We do a lot of that, kind of drive to vacation areas. We look for university towns. Universities, again, similar to military, create a demand for short-term furnished accommodations. State capitals, major hospital systems, areas that have a lot of influx of industry that's in creating. We do a lot of contractor work, traveling electricians, plumbers, that sort of stuff. And those, a bunch of big industries are arriving in a community that might not have adequate housing at the time for that, or is requiring temp workers to come in and help fill those roles. Then those are great sources of demand for the product as well.
And where are you finding most of that information? Like, are you just looking at the census website, or like city, county news, or where are you looking for that information?
Yeah, we are getting from on the revenue side, we're looking for, at kind of AirDNA and other sites like AirDNA that kind of scrape, rental revenue from the OTAs and try to get a sense of what that revenue looks like. And then on the asset price standpoint, we're mainly just pulling kind of Zillow and stuff like that. So that's that first cut point of what's the revenue coming from the short-term rental data websites divided by asset price, which is kind of pulling from various, MLS backed, technology platforms.
Okay. And so one of the things that some people have mentioned to me, and that when I've talked with other short-term rental people, is market saturation. Obviously, there's some places where there are just a ton of short-term rentals, other places where there aren't so many, but there's also places where there's a ton of short-term rentals, but there's still, gaps in the market that you can, fill and be quite successful. So when it comes to figuring out not just if a market's going to be good for short-term rentals, but if there's a space for your short-term rental in it, how do y'all go about making sure that you're not getting into a place where all of the signs point in the right direction, but y'all are too late to the game?
Yeah, so we look at how much market, supply growth there's been and how that's impacting supply and demand. We think about what percentage of a market do we want to constitute in terms of supply. And we look at regulatory regime. So if you have a tight regulatory regime that has caps or other restrictions on new inventory coming in, that's obviously helpful in a way. And then, ultimately, though, we also try to think that we're better than most operators, just take their property and put it on Airbnb or HomeAway or maybe both. We push out across 17 or 18 different distribution networks. We have our own direct channels that we've built through repeat guests and B2B marketing and stuff like that. So we try to think about not necessarily how is the average short-term rental performing in a market, but how do we think we can perform, in the kind of product that we offer.
Yeah. All right. Fantastic. And so how do you recommend, you mentioned a lot of people just throw their properties up on Airbnb or HomeAway. What are some of the things that you've seen that you've done yourself, or that you've seen other investors do to help them kind of stand out and to become more of a success than just your average person who throws it out there and sees who books on their site?
Yeah, I think thinking creatively about amenities is helpful. Thinking about the kind of design of the home and making sure you've got really good professional photographs that kind of reflect the home and put it in a good light. Being strategic about how you describe in terms of writing the descriptions, the amenity selections that you choose, how you set your pricing algorithms in terms of last minute booking versus early bird, and trying to leave space for long-term reservations on the calendar versus booking out a few weekends, months in advance, that then prevent longer term reservations. And so that's a lot of what we think about, is how to balance. It's a pricing revenue management question. It's a marketing in terms of descriptions, listing photos, and things of that sort. And then it's an amenity offering. And then obviously, this huge piece of it is what past guests say, and you manage your reviews and things of that sort.
Okay. And so one thing you didn't touch on earlier was, what kind of markets have y'all seen lately that stand out to you as, this is a solid investment market that either we want to get into or we think our investors should get into?
Yeah, so we love markets like Savannah, right, that have military, college, tourism, a lot of influx of industry, like a lot of different positive factors going at once, or Pensacola, which again has military, beach, and then other stuff. We like, we're a little bit more skeptical of kind of mountain destinations. These tend to be more seasonal, and there's less of a premium on, kind of the, it's less kind of restrictions on supply. So, and then we like, we like most southern cities, frankly, for our kind of core utility product. We find that there's a need for that in most cities. So we're in over 40 markets. So we're in a lot of different locations.
Yeah, fantastic. So whenever you were scaling, you mentioned you were doing the burrs and everything, and then you got into more of the short term. Were you still doing kind of like your own rehabs whenever by the time you got to short term rentals, or at that point did your acquisition strategy change, or what did you do once you got into not just doing single family burrs?
I managed most of the renos up through probably 20, 30 homes, somewhere in there. I wasn't, the first 5 or 6 or 7, I was doing the renos, right? And then like from somewhere between 7 and 10, I stopped doing a lot of the work myself, but directly managing it. And then, by when we were in the 30s, I had somebody to help me do that.
So then, but you were still like for your short-term rentals that you have, you would find kind of a distressed asset, fix it up, and then do it that way? Or were you finding places that were being used as a short-term rental and you thought, I can go in here, make these changes, and then it'll perform even better?
No, we have, primarily bought stuff that is not currently, some stuff might be new builds or turnkey, but is not currently we don't buy a lot of existing short-term rentals.
Okay. And so what size home do you think is usually a good choice for short term? Are most places better for like 3-bedroom, 4-bedroom, like kind of, are bigger homes better? And what advice do you have for people who are just trying to figure out, what kind of home to buy when it comes to those?
I think that, again, you got to think through what your skill set is, right? So if you have an eye for, in the skill set to do rehabs, I guess the more, if your kind of total cash on cash returns will be best if you're a great renovator and you buy a property off market and you renovate it yourself, and then you've got furniture from family member, whatever else, you furnish it and set it up yourself, right? Like if you do all that yourself, you're investing a lot of sweat equity in it, so your returns are going to be higher. If you don't have the skill set to do or manage renos, or don't have a desire or aptitude to kind of stage and furnish the house, you're probably better off paying somebody else too. So, or buying a turnkey house, right? So if you're like, I don't know how to, I don't like doing renovations, I don't like staging and furnishing homes, then your best bet is to either buy an existing short-term rental or buy a truly turnkey, kind of class A style property and just, hire somebody to put furniture in it, or hire a firm, like ours that can oversee those processes that are not your kind of core skill set, and, let them help do that for you.
But in terms of just like the acquisition part, like should people be looking, is it like more bedrooms the better, or is it, you don't really start seeing much improvement after 3 or 4 bedroom sizes in general? Obviously this isn't for every market. Like, is there a point where it's too big or too small to really function well as an Airbnb or short-term rental, I should say?
No, I mean, there's plenty, 1 bed, 1 baths, 2 bed, 1 baths, that do well. We like kind of quadplexes and stuff that have a couple of smaller units in it. We can list them in combination or separately. So, in general, I would say that, the biggest arbitrage in terms of performance of short-term rental versus long-term rental tends to be closer to the downtown core, bigger properties, right? Nicer properties, less of an arbitrage difference as you kind of go down in quality, down in size, and move further away from the downtown core. But we still have properties that are, some of our best performing properties are, in fact, I think our single best performing property is actually a quadplex that has it's a 3-1, it has two 2-1s and a 1-1.
Okay. What are some of the biggest mistakes you see people making when they come into the short-term rental space, and how have you overcome those?
Spending too much money is always spending too much money is always the problem. That's a problem. Number two, I've seen a lot of people get these kind of variable interest only rate loans, and that's pretty dangerous in my view, particularly in the rate environment that we're in. I see a lot of people think, oh, it's passive, right? Passive income. Short-term rentals are not passive income, right? So, not if you're self-managing. So that's another one. And then if you are and then people who are managing their own home, like they just get too emotionally attached to it, right? And it's like somebody says they hate the paint color of your home, or it's a terrible street, or I hate your neighbors, or your kitchen's dumpy, or your bathroom stinks, or that, and people just get emotionally attached to it, particularly if it's their vacation home or their home, or they designed the home that they think it looks beautiful, right? It's perfect, and then somebody shows up and is like, it's dirty, this is broken, this is terrible, this house shouldn't even be able to be rented, right? And then they like internalize all of those criticisms in a way that is unproductive. So that's one problem. The other thing, people just underprice, right? Or they don't use dynamic pricing. They just say, all right, I'm going to charge, $100 a night on the weekend, on the weekdays, and $150 a night on the weekend. And those are my two prices. In our properties, we will have, if you're in a college town, maybe on a Tuesday in January, we'll rent the house for $100 a night. And maybe on graduation weekend, it may be $1,600 a night, right? I mean, that's huge price variation, but it just reflects, supply and demand and how that ebbs and flows over the year. And if you can't capture those peak events and peak seasons, you're just never going to make the returns that you need to. So pricing too low, not doing dynamic pricing, getting too emotionally attached to what people say about the houses, this illusion that it's passive income when it's not. And then, if you're going to have a short-term rental, I wouldn't put a family heirloom in there, right? Like, if this is grandfather's handcrafted wooden table that's like the most cherished possession you have, I would not put that in a short-term rental.
Yeah, absolutely. So when you say spending too much money, are you talking about on furnishings or on the property, or yes? What are you referring to?
Right. Spend too much money buying the property because they think it has to be it's got to be the $1 million, the biggest, nicest. Spend too much money renovating it. Spend way too much money on the furniture. And then are too liberal with guest reviews, right? I mean, the reality of it is a lot of guests will show up and start pushing for a refund from the day from the minute they hit the house, right? Because they know that it's a two-sided marketplace in theory, but in reality, it's really the host that is most susceptible to a bad review. And so they can threaten the host with bad reviews, and most hosts will then kind of roll over, even if it's not really a valid complaint, and give them the money.
Now, that's one thing we haven't touched on much, is how do you deal with that? I mean, if you've got people coming at you and saying those kind of things, how do you resolve that?
I mean, we have about 16,000 guests a month come through our houses at this point. So our team's pretty good at ferreting out what's a legitimate issue and what's not. So that's, we start trying to do things like, if let's say somebody shows up and is like, well, the house isn't this way, or, the bed was then then we'll say, okay, would you like us to come address it for you? When's a good time for us to come address it? And they're like, well, I don't, I just want a refund. I don't want people messing in the. It's like, okay, well, what if we got you and your family like coffee, or something like that, so we'll buy you coffee or something like that. We'll go out and help it. No, I don't want that. Or like, well, what if we give you a credit towards a future stay, and it's like the last thing we offer is just to issue a refund. And if the people are just, as simple as you'll see, like people literally send in photos that still have the Getty Images, tags on them. Like, there's bed bugs in this bed. And it's like, okay, well, are you willing, you're confident there's bed bugs. Yes, I'm confident there's bed bugs. Okay, we'll send out a pest control company to inspect. If the pest control company says they're bed bugs, then absolutely we'll refund your stay and, move you to another house, whatever it might be. If the pest control company comes out and says there aren't bed bugs, then we're going to ask you to agree to pay for the service call to send out the pest control company, because we have a third-party cleaning company that just went through and they didn't report any bed bugs. And then if they're like, so you start trying to have them put some skin in the game, have some commitments, if, to prove out that they really have a legitimate issue. And some people certainly do. Look, $15,000 a month, we make all sorts of mistakes, right? And some of them are little mistakes, and we ask a little grace for, and and try to make it up. Some of them are big mistakes. We miss cleans. It's just the reality. Something glitches in the software, the notification doesn't get pushed to the cleaner doesn't go, and then the house isn't clean, right? Or AC breaks, or another one that is actually has been frequent, is power outages. And that's power's out for the whole half the city. It's like, we'll work out something, but that's not our fault. We didn't knock the power out. So
yeah. All right. So who is your target company? Like, if I'm listening to this and I have short-term rentals, how do I know if I'm a good fit for what you are offering?
So we would say that our folks fall in, our partners fall into a couple of categories. First of all, we have our larger, investors who want to have may want to have 10, 20, 50, 100, 500. We got one, one's 500 properties, right? So there's that category that if you're wanting to make a large, almost institutional style play in the short-term rental space, great. You can hire us. We'll do everything for you. Acquisitions, renovation, all that stuff. Then there's, if you set aside that category, then the next is your kind of retail investor that says, hey, I just want to have a couple, but I'd like for you to go out and find the house for me and renovate it and furnish it and do all of that stuff for me and then manage it. And then the third category is somebody who, already has a property. They're using it as a long-term rental, and they're like, I think I could optimize this better as a short-term rental. Then we'll come in and help them convert it from long-term to short-term. And then the fourth category is, I've already got a vacation home, short-term rental, whatever else. I'm tired of the headache of dealing with it. I don't think I'm optimizing my revenue, whatever it might be. And I want a professional management company to come in and get rid of the headache and, increase my revenue. And so those are the kind of four categories: big, larger style investors who want a full soup to nut solution, smaller retail investors who, still want us to go out and acquire them a purpose design portfolio, but wanted to, just have cash and are wanting to go deploy it. And then thirdly, people who have long-term rentals that want to convert them to short-term rental for higher yield. And then fourthly, people who have vacation homes or existing short-term rentals and are just tired of the headache, feel like they're not getting as much out of it as they can, and want us to take over.
Fantastic. Well, Joe, thank you so much for joining us today. I really appreciate it. The website is patriotfamilyhomes.com. That's patriotfamilyhomes.com. Really appreciate you joining us. And people, don't forget, if you want to get your copy of the top 20 markets to invest in 2023 that our founder, Zach Lemaster, wrote recently, you can email podcast@renttoretirement.com. That's podcast@renttoretirement.com. And also, don't forget, we are offering a $10 gift card to anyone who goes to their podcast platform, writes the review, takes a screenshot, and emails it to podcast@renttoretirement.com, as well as entering you in a $500 closing cost credit giveaway that we're doing in a raffle at the end of June 2023. Thank you so much for spending the time to educate yourself today. We'll talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.